If I could hop into a time machine and go back 5 years and give my past self just one video, this one would be it. After blowing so many accounts and switching strategies more times than I could count, I have boiled down everything into these core concepts that I'm going to share with you in this video. Whether you're just starting out or you've been in the trenches of trading for a while and you're still struggling to find consistency, I promise you that this video will save you years of pain, frustration, and most importantly, blown accounts. Let's get into it. Alright, let's kick things off with what I consider the foundation of my turnaround, which is focus. Most traders, especially when they're first starting out, fail because they have scattered their focus like a confetti at a party. They're trying to master everything: ICT strategy, SMC concepts, hanging man patterns, head and shoulders, VWAP bounces, you name it. They jump from strategy to strategy, instrument to instrument, session to session, and end up mastering nothing. Does that sound familiar to you? Well, that was me for a long time. My biggest breakthrough came when I drastically narrowed down my focus. Instead of trying to trade everything, I committed to mastering just a few key elements. For me, that meant gold in the Asia and London session and a very specific trend-following liquidity strategy with supply and demand targets. And that is it. No more chasing new shiny indicators or trying to trade every time the market was open. This wasn't about limiting myself, but it was about empowering myself through a very narrowed focus. Think about it, right? When you focus on just one instrument, you start to understand its unique personality, its typical movements, its quirks. When you focus on one session, you learn its rhythm, its volatility patterns. And when you master one setup, you build an almost intuitive understanding when there is a high probability setup and when you should stay away from the markets. This laser focus literally changed everything for me. It reduced the emotional roller coaster of trading because I wasn't reacting to every single market noise. I was patiently waiting for my setup in my session on my instrument. It's literally like being a sniper instead of a machine gunner. Precision over volume. So if you're feeling overwhelmed, ask yourself, what can I eliminate to gain more clarity? What is that one thing that if I master would literally change everything? Honestly, in trading, less is more. The next massive lesson that I learned, often the hard way, is that overtrading is an absolute account killer. In my early days, I was constantly chasing trades, trying to make my money back after a loss, or just feeling like because the market is open, I have to take a trade. Every candlestick looked like an opportunity, and every quiet moment felt like I was missing out on the action. And I literally treated my trading account like a video game, always trying to rack up more points. And this led me to impulsive decisions, poor trades, and ultimately more losses. And it really took me a long time to understand that cash is also a position in itself. You don't have to be in the market all the time, and you can decide that in this moment or today, I'm going to stay cash. And that is my position for today. I realized that it's not the winning trades that hold you back, but it's the bad trades, it's the impulsive trades, it's the poor decisions that literally destroy your account, your confidence, and put you in a hole. And when the market is good again, you're just trying to get yourself out of the hole again. It's literally like trying to catch every fish in the ocean. You just end up frustrated with a net full of junk and no fish. Focus on the big juicy plays that are worth your time. And to combat over trading, I started to put certain rules in place to prevent myself from trading when the market conditions are not good. And I realized that the only way to do this is by focusing on the higher time frames, especially the daily, the 8-hour, and the 4-hour chart. Because if there is no trend on the higher time frame, you should definitely not be taking a trade on the lower time frames. And by looking at this broader perspective, that really prevents you from getting chopped up on the lower time frames. It is like flying an airplane. You need to see the big picture of the weather system, not just the clouds that are in front of your windshield. This simple change drastically reduced the number of trades that I took and significantly improved the quality of my entries. So if you find yourself constantly in trades or feeling stressed out by the market noise, then zoom out. The higher time frames are your best friend for clarity. And this leads us perfectly into lesson number 3, which is structure plus higher time frame bias equals everything. When I first started day trading, and for the first few years, I always entered trades based on a gut feeling, a quick glance at a 5-minute chart, or some random indicator flashing green. And when I think about it now, I was essentially gambling and hoping for the best. And I completely missed what candlesticks are trying to show us, which is history, context, and the overall market picture. A single candlestick on a 5-minute chart is just a snapshot. It is like looking at one brick in front of you and trying to understand the whole building. For that, you need to zoom out. And my trading literally transformed when I started to prioritize higher time frames. Once I have my higher time frame bias is when I zoom in and I start looking for my entries and my confluences. As you can see, we had a very bullish daily candle close. And at the same time, the last few days have been relatively bearish. We've been setting a set of lower highs and lower lows. So coming in, I was open to both scenarios. I was open to shorting because of how the market structure was on the daily, and at the same time I was open to longing based on how that daily candle of yesterday closed. So then I dropped down to the 8-hour time frame, and these are the 8-hour candles that I saw when I came to the charts. And as you can see, this is a very, very bullish 8-hour candle close. So at this point, I'm not going to be calling the top and try to short this. This looks very, very bullish to me. So after that, I was monitoring the 4-hour chart. And this candle right here is the 4-hour candle close that I saw at 9 a.m. Bangkok time. And 9 a.m. Bangkok time is when I personally come to the charts to take a trade. And that 9 a.m. candle closure was extremely bullish. So at this point is when I dropped down to the 1-hour time frame. And my favorite kind of trades after the 4-hour closure are the ones that come back and create a wick. So basically the 4-hour candle closes very bullish, and then the next 4-hour candle comes down to grab some liquidity on the lower time frames, and then creates this wick here for the next move up to the next level of resistance, which is the areas that I have marked here, here, and here. So at that point, I was on the 1 hour and the 30 minutes looking for an opportunity. And as you can see, right over here, we had a 1 hour liquidity grab. This candle came out, grabbed the liquidity of the previous 1 hour, also correlated to this previous resistance level. So we not only grabbed the liquidity, but also checked this previous resistance to form a new support. So that is when I jumped down to the 30-minute time frame, and this candle right here is the candle that I used to make my entry. So this candle 30 minutes, which was also the 1 hour liquidity grab. Also in the bottom we have the VWAP, and not only that, we also have this 9 SMA that is curling right under it. And as you've seen in the previous videos, I love that kind of setup where the 9 SMA is curling right below the VWAP, and we have a liquidity grab. So that is exactly what happened here. And we were in this trade for the next 3 hours, and we had the TP hit right over there. And that is a beautiful setup. So as you see, even though the trade was taken on the 30-minute time frame, the actual trade idea was based on the 1 hour, the 4 hour, 8 hour, and the daily time frames. Those higher time frames is what I used to come up with my trade idea, and the lower time frame was literally just for my entry based on the bigger picture. Now this might be the most important lesson of all, and is the one that took me the longest to truly get. And that is, no matter how good your strategy is, if your mindset is not right, you will find ways to lose money. So I want to ask you this: how many times have you jumped into a trade because you saw it moving even though it wasn't your setup? Or tried to get back your money after taking a loss by taking an even riskier trade? This is where the work in trading truly begins, by learning to control your emotions. This is something that will continue to come up no matter how many years you're trading. You're still gonna get those fear and FOMO and those kinds of feelings, but you just over time get better at confronting it and having it not affect your trading results. In trading, it is so important to understand that trading is just a probability game. You won't win every single trade, and that is okay. It's about managing your emotions, sticking to your plan even when it's uncomfortable, and trusting that your edge is going to work out over a series of trades. And for me, a huge part of this transformation came when I really focused on the psychology side of trading. If you haven't already, I highly recommend that you check out Mark Douglas's work, especially his book, Trading in the Zone. Is literally the trading psychology Bible, and it's a book that will rewire your brain to become a consistent day trader. In fact, I even created a whole 40-minute audiobook summary of this book and is in the channel with the link in the description. So if you have about 40 minutes, definitely go ahead and check it out after watching this video. And finally, and this is absolutely crucial for long-term survival in this game, is to treat trading like a serious business and not like a hobby or a casino. And think about any successful business. Do they just wing it? Do they ignore their balance sheets? Absolutely not. Successful businesses track everything. They analyze their performance. They identify areas for improvement. And most importantly, they operate with a very clear strategy. And for me personally, I adapted the same exact approach to day trading. I started in a very detailed way to track everything in my trading progress. Not just P&Ls, but also win rates, or multiples, the mistakes that I was making, the setups that were working, the entry timeframes, even the psychological state that I was in when I was taking the trades. I always conduct daily reviews, weekly reviews, monthly reviews, going through every single trade that I take, exactly like a CEO that reviews their monthly and quarterly reports. This business-like approach helps you detach emotionally from individual trades and focus on the bigger picture, which is your overall performance over time. And it helps you to truly identify your edge and refine it over time. And for those of you who are serious about day trading, and if you have watched it until this part of the video, there's no doubt in my mind that you are serious. You definitely should be journaling your trades. That there's many softwares out there, and you could even do this for free on something like a Google Sheet or a piece of paper. But if you're looking for a software, I highly recommend using Tradezilla, which is the software that I've been using for the last 2 years, and I highly recommend it. It is very customizable. It has some amazing reports, and I'm probably going to do a detailed video on this at some point on the channel. So if you're interested in that video, let me know in the comments. Should I make a detailed video about journaling your trades on Tradezilla? You could find the link to that software in the description below, and you could go ahead and implement that as soon as possible in your trading as well. So there you have it, guys, my 5 biggest lessons from my 5 years in day trading. These are the principles that have absolutely transformed my day trading, and that is exactly why I'm building this YouTube channel, to share with you everything that I have learned so far from my 5 years of day trading and everything that I've been learning and going through every single day. And I want to build this community of traders who are not after those flashy Instagram and TikTok stuff, but who are looking to be great, disciplined traders. I hope that you enjoyed this video and you got some value from it. If you did, hit the like button. And if you haven't already, what are you doing? Hit the subscribe button, join the family. We are on our way to 1,000 disciplined, good traders who care about becoming better every single day. As always, thank you for being part of the community. Stay disciplined, stay focused, and I will see you in the next video. Peace.